These are our learnings from the Corona crisis. I'm more than happy to have Alex on my side for this interesting topic. Thank you, Alex, for your time.
Thank you for coming over here to Cyprus and having me on your channel.
It's a real pleasure, especially because we both are very much into finance markets, I would say, since many years.
That's
as
true.
a private investor, also as a YouTuber on topic of finance and P2P and ETF and so on. And I think it's a very interesting topic to exchange also with the community about our personal learnings from this crisis. Because a lot of people told us, our generation, you don't know what it means to have a market crash. You don't know what it means to invest in the crisis. And I think now nobody can say this any longer to us because this for sure was a crisis, a real crisis and a crash, especially in March 1 year ago. And it started, we have been together in this time frame about 1 year ago. We have been in Belarus, and this was exactly when this crisis began in Europe, to come over Europe as well. And so I would like to ask you, what was your impression also mentally in the first months of this crisis?
Yeah, so for the viewers who don't know me, I have this channel called Northern Finance, only in German though. But I started it about 4 years ago, and approximately at January of last year, I took the step to do it full-time and not only part-time. So just a few months before the crisis started, I was having this business as a full-time job. The crisis really hit me after the first few months, and that was mentally really challenging. It was a tough time because revenues were breaking down. The viewers were still interested, but basically no one was investing, and that's basically what my channel is about, talking about investments and taking new investments. But many people were scared, obviously, because the markets went down by huge margins. And for me mentally, of course, it was a difficult time, but I'm very happy that we got through it together, and that the markets took a sharp turn up after this huge crash in March and April.
Yeah, I think this was also a big learning, and at the same time, I think it was mentally hard for both of us to see. You're also an investor for yourself, so you're investing in ETF, in P2P, and then especially the ETF portfolio for sure went down sharply in this crash in March. At the same time, as an entrepreneur, it was very hard. So I can imagine this feeling, and it was not so much different on my side. But I think it was a big learning, the importance of the asset allocation. I always have this 30% cash ratio. Also right now, after 1 year as a learning, maybe we talk about the asset allocation we have right now as well, after this learning we made. So at the moment I have 30% cash again, 9% in P2P, 1% in crypto, 2% in metals, 1% in private equity, and the huge part is with about 58% in the stock market.
Right.
Whereas I have the single shares and you have the ETF, but at the end it's the same asset. What is your current asset allocation after this learning, after this crash?
Well, I have about 10 to 15% of my portfolio always in peer-to-peer lending, in my P2P portfolio, so different platforms here. And I have almost all of the remaining 85% in my ETF portfolio, which consists of only 2 ETFs. Very boring, I know, but that's the way I like it. For a whole world ETF portfolio, so that's on the first place Vanguard Developed World ETF, and the other one is Vanguard Emerging Markets. So sometimes boring, but as I said, that's what I like. And then I have a small portion of my portfolio invested into equity of startups. So for example, Mintos peer-to-peer lending platform, Estate Guru peer-to-peer lending platform, and other fintechs apart from P2P as well. And I like to invest where I know what I'm investing into, and that's true for P2P because I talk on my channel almost every week about it, and ETFs as well. So that's what I focus on in my investments, and I try to diversify as much as I can.
It's a very interesting approach also because it's pretty different between both of us. And I think this is what makes it more interesting to talk about it, because if we always have the same approach and same opinion, would not make it that interesting also for the exchange with the community. Before we move to the P2P topic, where of course you are very into that, as you already said, I would like to mention that we have this different approach on the cash ratio.
Yes.
I like this 30%, which was for me, like I said, okay, it was a big opportunity for me because it was for me like cash is king, yeah, because I could move very fast in this market crash into the stock market and take the opportunity and make big profit. Financially, I have to be honest, it was one of the best years. Mentally, it was one of the worst, yeah. But financially, it was definitely one of the best, just to be honest. I bought like Tesla shares and all the others. I made just massive purchases, brought over the stock market. In March, a lot of people, it was tough because a lot of people told me, don't catch the falling knife and it will never recover and it will take years in this crisis and so on. But I said, no, I want to buy now. I don't know what happens in the next weeks, months and years. And this is an opportunity. I feel it's now cheap. It's blood on the streets. And I learned from the exchange I made before this crash in my financial education that you have to take such an opportunity and I want to do it. I want to try it right now. And it turned out to have been obviously not the worst decision. I didn't know it at this time, but
great decision.
After that it was one of the best decisions for now, for the moment. We don't know what happens tomorrow for sure as well. But yeah, so your approach is no, you just go long term and
yes,
yeah, that's it, but no cash ratio. Yeah?
Yes, long term buy and hold. I have actually in my portfolio 0% cash ratio. Some people might say that's a stupid idea, but I would disagree because my personal opinion on this is, and it differs from Bernhard, that if you invest long term into the stock market, you get the best return, and it's very hard to time the market. You did it perfectly, but I don't know if it can always be timed perfectly. Most probably not, I would say. I'm not that smart. So I just invest with my savings plan every month, and I have a 0% cash ratio. In private, for non-investment purposes, obviously I have cash, but I wouldn't count it into my portfolio just because I don't want to invest with it. I just want to have it as a reserve, basically. And in this time of March and April, I also invested more than I usually do because I said this will be an opportunity. And maybe it differs a little bit from my strategy that I invested a little bit more in this time. But nonetheless, I did it and it turned out to be a good decision. But I couldn't do it in this great margin or this huge amount of the portfolio just as you did. But still, I'm very happy with it, and I continue to have 0% cash in my portfolio and just long ETFs and buy and hold.
Yeah, I mean, then on the other hand, we can see that our opinion is not so different at all because still we both have this idea of the cost average effect. I always buy, yeah, so also the cost average, but of course I increased a lot at this time. I used my cash ratio. I even had the problem that I had no liquidity at the end of March, yeah, so I had to go out of P2P and swap it into the equity asset, which was always my idea because you also told it, you said it to me when we met in Vienna, I think about 1.5 years ago, that my ratio on P2P is maybe too high. But this was because I saw no entry opportunity on the stock market at this time.
Right.
So I just used this because you never know. We did not know that the Corona crash will come in March. Yeah, we didn't know that. So just to make the money work and have not more than this 30% cash ratio. But I didn't want to go in the stock market because I thought the prices are too high for the value. I made this P2P, and this was the perfect opportunity in March to go from the P2P and from the cash into the stock market. And it also showed that the P2P platforms didn't perform that bad as we might have expected, because for me it was, I could cash out. It was okay. I mean, I had, for example, this 10% discount on the secondary market on Mintos, but this is my fault if I decide that I can invest somewhere else where I will make more than this 10%. So it is for me an opportunity to go to the stock market at this moment. This was my personal decision, and I can't blame Mintos for the discount I decide to make when I sell on the secondary market, but it did work properly. And also on other platforms like Swapper, I went out of that with my initial investment, like on most platforms at this time. I only left the interest return on the platform and moved out my initial investment at those days. And it did work properly because these short-term loans on Swapper, with a great return. The return was paid, yeah, and also the buyback and everything worked. And after 30 or 60 days, I was out with most of the cash from Swapper or from the other P2P platforms and went into the stock market and could take this opportunity. And yes, of course, I did not time perfect, as you said. It was not perfect because I bought too early. I started already when we have been in Belarus. I already bought on the stock market, which turned out later to be too early because the big crash came few weeks later. Yeah? But yeah, you never get this dip, I'm sure. Yeah? You have to buy when it's close to the dip. And a lot of people would prefer to buy when it's going up and it's already very high because it feels good to have the next day even more in the portfolio. But if you can mentally take the opportunity and live with that you buy when it's going really down, I think it's much better for the long term.
Yeah, and it shows that you just have a resilience in you and that you believe in your investment and that you can't be changing your strategy just in a day, and that won't work basically. If you're too unsure about your investment, if it goes down 5% the next day and you worry too much, then it might show you that you don't know enough about it, or that you might want to invest into something else. Yeah,
or maybe, as you said, it's maybe just not the right thing for you. Yeah, it's not made for everybody. It's like a job or like anything. Yeah, because
maybe it's not the right stock or not the right ETF. Maybe it needs to be more conservative.
Maybe that, or maybe even it's not. You're not made for investing, which is also okay.
Could be.
But for me, it was also interesting.
I just like to believe most people could be into investing. Maybe that's why I have this opinion.
I think it was also interesting for me, but it's a topic that is also a difference between both of us. Sure. You go with the ETF. I would not say I hate ETF because it's not black and white, and I also have some ETF in my portfolio, as the people know, because I have everything online on my channel.
And it's hard to hate good things.
Yeah, okay. But I prefer a lot the single shares because of all these advantages you can get with the single share. Also the direct investment where you don't have an additional emittent risk and you get this cash flow all year round with the dividend payments, which are my main income meanwhile. And also you get all these goodies, and you can meet the annual meetings. Okay, you cannot attend the annual meetings right now, which is obvious because of the pandemic, but it will be again in future. And you get a lot of goodies like free gifts and so on, and discount. I can rent a car cheaper at Sixt and so on, as a shareholder. And I like this direct investment. And also I think for sure it will not work always, and I will have my learning on that as well. I'm sure about this, but it worked very well in the last years, let me say it like this, also very grateful to outperform the market a lot, and especially last year, which was also mentally for me interesting because you said, okay, are you resilient or not mentally on this situation? And for me it was really, I saw a discount. I thought, okay, now I have to buy. If I buy now, I will get wealth, and I will have dreams come true in the next years.
Right.
And this helped me also to have this vision in my head where I want to go, my goals. And also I saw a lot of opportunities, for example, in the last months on the bank stocks and also on the fintech, which still are, in my opinion, they still have a discount. And they have a very high dividend ratio at the moment. They're like 7-8%, some of them, but with a healthy payout ratio. This is something also interesting, but I will make another video on my purchases in the first quarter of this year. I think it would be too much for this video. And so now let's go to the P2P, which is especially also your topic. And I'm also very much into P2P because we are both very early mover and we know the market, I would say, pretty well. We have been a lot of times to the offices and met with the management and also went to the loan originators.
That's true.
In Spain, in Latvia, in Estonia and so on, Belarus and where we have been all over the world already. And we will do hopefully other trips again to make some research.
I'm sure.
I think it's very exciting always, and it's very important for my own investment, to be honest, especially in my situation, because it always depends, but I have some money in P2P and in general invested, so it makes a huge difference for me if I know what I'm doing and I have some inside news. I think from the P2P it was a big learning for us investors, for sure. and it was also a big learning for the platforms. And what also has been very important, I think it was a market adjustment, a healthy market adjustment. It was hard, but
definitely.
it was a healthy market adjustment.
Definitely.
It was good that we have seen this right now and not maybe some years later. Yeah?
And every market needs cleansing, or however you want to call it, at some point, because otherwise some bad participants or bad P2P platforms in this case, they will just get more investors, more funds, and do more damage when they eventually fail. So it's very good for every market if after 5 years or whatever time span a crash comes, or just a market crisis in some form, where the bad participants just lose, and participants, investors see which platforms really are worth the money, and which ones they can trust, which one performs good in a crisis, and which one can recover funds from defaulted loan originators, for example, and which ones can't.
Very good point, and I think it was very interesting for me to see that they even performed better than I expected, honestly. I mean, we had a really big crisis. I mean, it was the biggest crisis since the Second World War, one can say.
Yes.
Yeah? And there were some that really did good.
Yeah.
Just from the experience as a private investor. I mean, of course, they might have had some problems in the background, but at least we had a stable interest return. It worked. They paid out the interest, and it was still liquidity, and I could withdraw my money to invest, for example, in the stock market and change and get my cash ratio again when I bought on the stock market. So this turned out very well. For example, from my platforms, as a private investor, from my experience, Twino, Bondora, Via Invest, Swapper, Asset Guru have been platforms. I had no problems with that as a private investor. Yeah. I mean, Bondora had this limit, but I think if you understand the business of them, I think it's even a proof that they are responsible for what they are doing. So for me, that was a plus.
Yeah.
But for example, Swapper, they have a great return, and I was with the short-term loans after 2 months, 3 months, I had withdrawn my initial investment.
Sure. You know, Bernhard, the issue, what I talk about on my channel also in terms of diversification of peer-to-peer platforms, is that of course you can invest into platforms that have just one loan originator, and for example, Via
like
Invest,
this list
Swapper,
we have,
Twino, they all have one loan originator, and either this investment will work 100% because the loan originator is doing well or good enough, however you want to call it, or the entire investment on this platform, well, is in doubt, or funds in recovery, however you want to call this again, because either they work or they don't. It's very binary. And on a marketplace like Mintos or another peer-to-peer marketplace, you just have many loan originators, and some of them will fail in a crisis just because it's a risky business model. That's why we earn as investors 10% and more every year. And it's hard to compare these platforms, which just have one loan originator, with those who are marketplaces. But I'm also very glad that those, especially with just one loan originator, worked well. I'm also invested into these. And Via Invest, for example, I like very much because they have been for a long time active in the market. They publish their annual reports. They have a qualified management. And I just like the way they do business. But it's hard to compare with Mintos, for example.
Yeah, absolutely agree. Absolutely agree on that. And we also had a very interesting exchange in our community. Thank you for all the comments on the last videos I made in the last month. That we saw that in this crisis, we don't know what happens tomorrow, as on all investments. Yeah,
that's right.
But in this crisis, the platforms that had only in-house, I would call it like this, you know what I mean, of course, I think, you know, English is not my, I'm not the strongest in English language, but I tried to improve, Yes. Anyway, you know what I mean, these platforms that have all in one company or in one holding performed better in this crisis, I believe. But yes, you're absolutely right and absolutely agree that there is also the higher risk because it's like only one and not diversified on different loan originators as we have it on Bondstore or Mintos, for example, from my platforms. So maybe let's also continue the list. I think Bondstore was so. They had some problems, especially my experience as a private investor, because I was hugely invested in micro-CASA loan originator because they had a very high return, and I like high return. I also like this monthly. This is also something.
How high was it?
Like 14%. At this time it was high because before the crisis most have been at 12% or something like that and below, and this was above with 14%. But the problem was micro-CASA had a big problem at the beginning of the crisis, and they just decided like we can't pay back, and I was really disappointed at this point. Also on Jana, she was the CEO. Sorry for that, Jana, and also on Bonstead this time. But after all, I saw that they really made a good job because I got most of that already recovered, and they are still working on very hard on the recovery. And this is a plus at the end for the platform because they really tried hard to manage that. And at the end, I made a great return. They succeeded, and I made a great return already. Yeah. And so this is a plus at the end. And I will also do some more research, of course, on Bonstead. We plan a interview next week with the new CEO, and we will also look behind the scenes on site as soon as it's possible in Prague to make an office tour. And I always want to see this and touch this by myself to get a better feeling and understand the business. If we come to Mintos, for me, Mintos, I was a little bit disappointed. I think they did not perform that well in the crisis. I think your opinion is a bit different on Mintos.
I would disagree, yes. I think it's hard to judge Mintos right now. They have about 50 loan originators, more or less. And of course, some of those will fail. And with some, you get the recovery of funds really fast, maybe just a few months until the issue is resolved. Others go into insolvency proceedings, and that can take years. So for me, it's hard to say right now if Mintos did a good job because we don't know about the recovery and or the recovery rates in particular, and what really return I made last year, because some of the return is still doubtful, and we don't know how much exactly will be recovered. We can approximate something, and we can say I earned maybe somewhere between 8 and 10% last year in Mintos, but I don't know for sure. And I need to know for sure just to make a good educated judgment about how well Mintos actually did. And this is also something which I will follow closely in the next few months and years, how much actually gets recovered, because that for me is one of the most important signals for long-term health of my investment in Mintos. If they do a good job with recoveries, not only with providing the returns and interest payments when the sun is shining, but also when we have a big storm coming.
Yeah, absolutely agree on you regarding that, Alex. Absolutely true. And I will follow up as well very closely, which is obvious sure because I have a lot of money in it still, also in the recovery.
Yes.
But also I can agree on terms that, or I would say, I think they also made a learning. The platforms made a big learning, and we as investors, and which authentic shows also that I still like Mintos is that it's already my top 1 platform.
Yeah.
This month I already increased again on Mintos my investments. You will see the next P2P update. So now top platform is Mintos again, which shows, of course, I see an opportunity for the future also in Mintos, because they have a lot of developments right now. We'll also watch this very closely, the Mintos card and the licenses and so on.
Yeah.
So I think it's very interesting for the future, but we have to look closely how they will develop.
That's right.
All these ideas they have in the next months and years.
For me, they are number 2 actually. Bondora is number 1.
Oh, really?
Yeah.
No. Okay. Bondora with the Go and Grow for me has not so high return, because the 6%, it's interesting, I like it. It's also my top platforms for sure, and I increased it as well. But on my side, if I've right in mind moment, 1 is Mintos, 2 and 3 is sharing Bonster and Asset Guru, and then Bondora. Yeah, but okay. Bondora is the point. I expect in average on the stock market about 8% return per year. And so Bondora is below, but it has some advantages also for the asset allocation, for diversification, because it's a different approach and you have liquidity and so on. So yes, there are reasons why I'm still heavily invested in Bondora as well, but it's not my number one because of the return of this 6.7 approximately interest return. What I really like on Bondora is that it's daily paid, the interest.
That's great, yeah.
It's also for the mental feeling, just nice that you know every day you earn this €1. We both have the goal of the €1 every day, so we both increased on Bondora.
€5,700, and then you get €1 every day.
Exactly, and I already paid in.
I was very happy about that when I reached it.
but I have to wait because I have this limit with the €400. So I will reach it next month. I think yes, next month I will be there.
That's great.
But anyway, to continue.
Yeah.
What I still like on P2P is what you mentioned, this 12%, but not only this, about 12% per year. It's very predictable because you have every month this predictable cash flow, which is for me as some kind of private, where I also live from this money I earn with the investments. Very important. Yeah. This is also the reason why I like the single shares, because I have this all year round this income cash flow from the dividend payments and of course from the P2P investments. But maybe let's also continue a bit further on the topic Corona crisis, not only as an investor. I think the big learning as an investor is how can we deal it mentally? Do we have a well thought asset allocation on different assets for different kind of crises? And do we have in all these assets a diversification? I think this is the big learning. Right. And I already had this before, like you, so it turned out well in the crisis. And it was one of our best years from terms of investments at the end. We don't know what happens tomorrow for sure. But now let's go back to the entrepreneur perspectives. What was your experience as entrepreneur in this whole crisis until now?
So what I learned first and foremost, what I will take with me as a learning for, I hope, a very long time, that I can continue with it, is just having a business that is 100% digital. So I don't have any physical business. I don't need to be outside or ship anything or do any physical interaction. I just have this 100% online business, and the important thing for me was the government can't shut me down and I don't have any issues with my supply chain. Of course, the stuff I talk about on my channel, peer-to-peer lending, exchange-traded funds, they can suffer, and that also affects my business, of course, but the government can't shut me down. And that's really when I talk with people here in Cyprus, many work in tourism, when they were shut down for now almost 12 months. It's really horrible, and this is one learning I took with me, I want to keep. And the other one is that I have people working for me, not employees, but instead self-employed people who work from all over the world for me, and they do a great job, and I want to keep that. I still want to employ them, but if the next pandemic is coming in a few months, right, we don't know what happens tomorrow, you said that, and we truly don't. So if the next pandemic is coming, I can cut down my costs very in an efficient way, very fast, and well, then I have to do a little bit more by myself, which I didn't used to do before. Maybe I will do even a job that's not as good as they are doing right now, but I can cut my costs, and I only have very little cost remaining for the website and other stuff. But yeah, to have a 100% digital business and to have many self-employed people working for you, where you can cut the costs if you need to, because yeah, I can't spend money in a crisis which I can't afford, right? So yeah, that's what I learned. How did you do that?
Yeah, I agree very much on that, and it was very similar also my experience and my learnings from this crisis. I am a little bit more diversified in my businesses. I have 2 companies, and one business is of course online like yours. I also do YouTube, obviously, as you can see right now.
That's true.
And but I also have this online business where I sell books on Amazon and different products, and Also, of course, affiliate and all that stuff that online business does. And on the other hand, I also have an offline business where I do driving trainings, events for Tesla, for example, driving trainings and such stuff. Yeah, and this was hit very hard, obviously. Yeah,
Yes.
it was hard for me mentally because I had to cancel all these appointments, also with the clients and so on. So this was very tough in the first month. At the same time, my portfolio went down in the crash, on the stock market, and everything is going down. But then, as I already said, I saw this big opportunity, and also to focus on the topics that are working, like YouTube, like selling online. And it was hard mentally. It was one of the really worst years I ever had. It was really hard for me, also like with burnout feeling and so on, was very close. And I think even had some burnout at some months and felt very tired and so on. I think a lot of people had this experience in these days. Yeah.
Yes.
Also a big learning, that you have to also keep healthy mentally, and also think on the recovery regarding that. But anyway, for me, the learning was that it's good to be diversified on different businesses and have different income streams. Not only as entrepreneur, also as private investor, for example, and because this was for me the really great cash flow in this year, which made me feel safe. Because I don't have, for example, only one job as employee, where maybe it doesn't work if you are working in a restaurant or in tourism or whatever. It can be hard also as an employee, and I think this is where it leads us to the next topic I wanted to talk about. Obviously, a lot of our community might know the book CASHFLOW QUADRANT from Kiyosaki. I like this picture of the cash flow quadrant where you have this one quarter with the employee, the other one with the self-employed, the other one with the self-employed, the one with the entrepreneur, and the one with the investor or private investor. I mean, no real difference between private investor, whatever. Yeah, you know what I mean. Yeah. Same. So I think you can see on the left side of this quadrants. Do you see
Quadrant.
On the left side of this quadrant, I think it could be both ways in the crisis. It depends on where you're working. If you're working in a supermarket, okay, no problem as an employee because they had all year round very busy. But if you work in a restaurant or a lot of other businesses where they had to cut down, you might have lost your job, or you are in this Kurzarbeit, as they say in German. And so this
getting state benefits.
This can be very hard because if you're not financially educated and did not make your homework before such a crisis, and maybe have to pay some loans or whatever, which is what we make money as a P2P investor, but other people take these loans.
That's part of the game.
And then it can be very hard for them in the crisis. And a lot of people always say to me, especially before the crisis, Bernhard, what you're doing, and you might have had the same experience with investing in P2P, in the stock market, being self-employed and entrepreneur, can be really dangerous and risky. And my experience was in this crisis that it was exactly opposite. Because you have worldwide income as a shareholder of a global diversified portfolio. I have about 200 single stocks in my portfolio. So from all over the world.
200 already.
Which is, it is a diversified income, which is a cash flow that continues also in the crisis, because Starbucks might be closed in Germany, but here in Cyprus, for example, it's open. And they still have a cash flow and they still pay dividends because it's a
still
global.
Good.
Exactly.
No advertisement, but still
no advertisement. But we are invested in this as a shareholder. Anyway, no. So I think this is very interesting learning. Maybe also a video topic to say, okay, maybe it's not risky to be globally diversified and with a well-thought asset allocation invested in the finance markets. Maybe it's the bigger risk to be employed, as it showed in this crisis. Yeah, but maybe to finish with these learnings, we had some personal question at the end. Your feelings, your mental health, your experience as a person, Alex, you made during this crisis.
Yeah, so very good question. Many people suffered during the crisis just because of the social isolation that you had to do, and I also was part of that group. I am a gamer, as you saw yesterday. I like to play PlayStation sometimes, so I'm used to being alone for extended periods of time, but not this extended, of course. And it was tough for all of us, But what I did during this time was just pour myself into work and work 10-hour, 12-hour, sometimes 14-hour days. I don't know if that was healthy, probably not, but it was my drug that kept me waking up and motivated and just continue doing what I knew I can do best, which was well, researching, shooting videos, all that good stuff. And yeah, that's how I coped, how I handled this situation, because it was very challenging, of course. If you're here on an island, you're new, you're just making friends and not too many, but I would say very good connections here. So of course it's challenging, but I'm very glad that we do these kinds of in-person meetings. Again, it's a business trip. I mean, we're not laying on the beach and tanning ourselves, but we're producing videos and making podcasts. So yeah, it's very nice to see light at the end of the tunnel, we say in Germany, and that's what I do, or that's what I see right now, this light, that it's getting better, and that also keeps me motivated. How did you cope with it?
Very similar. I had a very similar experience. Also, I have not been on the island, but it was pretty the same, I think, on the whole world. We had lockdowns. We were not allowed to leave the home. We had to make home office. So mentally it was very, very hard. But also it showed that there was some compensation mentally, because it was one of the financially best years in my situation. I have to be very grateful for that. I'm saying that because I'm grateful and thankful for that, and it could have been very different also in this connection. But it was mentally very, very hard, because we are made to socialize. And yes, especially as a YouTuber, also in the German community, we have a lot of exchange with the community, a lot of comments, and you have these Zoom meetings also with the management of the B2B platforms and of a lot of other companies and with other YouTubers and so on. But then you learn, I mean, I wouldn't like to know what it would have been if we have not had this opportunity to exchange on the internet, if we wouldn't have had an internet.
Pretty horrible.
It would be even very, very worse. But still, it was the learning that it's never the same. If you are together and now we go for the lunch and so on, it's something completely different in kinds of socialize. Yeah.
That's right.
So for me, it was mentally very hard, because I was used to travel a lot and meet a lot of people physically and so on. Also make the interviews on site for the YouTube channel and so on. And now it was not possible, simple. And this was very hard, and I'm really looking forward and hope that the vaccine does help. And anyway, however, the situation improves, that we are very soon able to travel again. But this also shows one more advantage in the situation we have, that we are able to afford maybe even a bit more for traveling, because the flight tickets have been more expensive, or you fly on business class right now because you don't want to sit between two people. Also, I'm vaccinated since a bit more than 1 week, but you know, don't risk anything. We don't know how safe it works with this vaccine after a few days. So I try to book where I have nobody sitting beside me, which is in the business class of Austrian, for example, you have not 3 in a row, only 2 on 3 seats and so on. But it makes it easier, because you can afford to travel and you can socialize and you can recover mentally. And also it helps a lot that we are business owners, because as a business owner, I can make a business trip and I can write myself with your company. We both can write the other one. Some papers that we just had to meet, because it's also the truth, because we have to do our business, we have to continue. But this is also helping for socializing mentally, to be honest. So this is also what it showed, that it's maybe also regarding that an advantage to be in different quarters of this cash flow quadrant, to mention this again at the end of this video, and have the opportunity to make some things easier. In these situations, as a private investor, with the cash flow and with the international income and different income strains, as well as a business owner, very able to make such trips and so on. So I think that's basically it for the moment. One more thing I forgot in the interview I want to add is, because you said, okay, the big risk of this B2B platform topic once more, where you have only one loan originator because it's in-house, and the advantage if there is a marketplace like Mintos. But we also had one big learning in the last year, and I want to mention it, GRUPEER, which was a marketplace, but it showed also the risk if it is a marketplace that is not working. So it's also
Yes.
very important to look in the office, to talk to the CEO, make your own impression and research, which we made
Yeah.
always, and which prevented me to lose more money.
Yes.
It didn't prevent me to lose no money because it was too late when I made the research and when I made my decision. You have been with me, so you know exactly what we are talking about. But it prevented me to invest more. So you
Yes.
see, it's very important to make this research, and it's also a risk on the marketplace.
And you're never 100% protected against fraud. I mean, look at Wirecard in Germany, where even the
Austrian
biggest
bank,
investors are fooled, right?
The Austrian bank is also been some
So
problems.
you're never protected against fraud, but you can do your best to spot it when you see it, and that's how you do it, by visiting on site, by checking their finances, and just
do your homework.
doing your own research.
Yeah, exactly. And everybody is responsible for himself, for his decisions. I would never say this guy is responsible for what I do, because it's always on your own risk if you're investing. And yeah, that's basically it. So also no investment recommendations, as always. The final statement, I think we had the learning, it's important to think on the asset allocation, also on the business in your whole life, on diversification. And of course in investment, it also showed that it's good to have some financial education, take it as learning and benefit from a well-thought, diversified asset allocation. Yeah, I think that's basically it. And now we are looking very much forward further exchange in the comments, because for sure we did not mention a lot of points you could mention in this topic. But yeah, then the video would be 1 hour, and I think it's very interesting to further exchange right now in our community.
Thank you very much for watching until the end, and if you liked the video, leave a like.
Thank you so much. Bye bye. All the best, and all the best in the pandemic. Stay healthy.